Now let's get another check on Google parent Alphabet. Shares currently in the red after a beat on the top and bottom line. Well, no, they're not in the red. They've poked into the green, about flat. Joining us now, Rohit Kulkarni from Roth, MKM, Brent Thill from Jefferies. Guys, welcome. Rohit, I'm wondering about this YouTube number. I mean, Dan Ives was saying it's a Goldilocks quarter. A lot of good here. There are beats, but $8.66 billion, that's up $1 billion year over year, but about a third of $1 billion short of what the street wanted. What does this say about brand ads, and does it put pressure on commentary on capital spending?
I think you hit the nail on the head, John. I think YouTube, our checks were positive heading into the earnings. So this is a negative surprise versus what we thought they would print for YouTube. With somewhat slight acceleration in revenues, they're going in the wrong direction here. This puts a slight wrinkle on companies that rely on brand ads, and probably that would mean smaller social media players like Snap or Pinterest. So that's something to dig deeper into as we learn more about brand ad spend from Google and others coming down the pipe. But overall, I think this was a fantastic quarter. We like Google here as probably the best AI play here across the board. They have infrastructure, enterprise, and direct-to-consumer, unlike any other company that we see.
Brent, on the other side, Google Cloud looking pretty good, a little bit better than expected there. And, Amazon has been looking strong lately as well. So is this strong enough? Is there commentary around that provides some valuation help, even though we do expect for the spending levels on AI to be probably high for Alphabet overall?
Yeah, I mean, Google Cloud was fine. I mean, they're contending being the number 3 player. They're not number 1. Amazon's dominated 50% market share, Microsoft's 2, and Google's the distant 3rd. So good to see momentum, but I think honestly, there's better momentum at Azure. There's better momentum at AWS. So the Google's had this issue. You've seen all the M&A chatter. Are they going to buy HubSpot? Are they going to buy Wiz? They can't figure out what they want to do, right? They're going to buy an application company. You're going to buy a security company. They're all over the map. So the reality is, when you're the number 3 and you're not the number 1, you got to figure out how do you reverse that? And right now, I think everyone we talk to is saying they're living in an AWS/Microsoft world. Google is in a good spot. We're not going to take anything away, but they are not number 1 or number 2. And in this game, those two are gonna be the ones that everyone are going to go to.
Yeah, and of course, it raises the question, Rohit, about spending and how much investment is going into this new era of cloud compute, this new era of generative AI, where we know Alphabet and Microsoft are really, at least right now, sort of cast as the leaders here. It looks like CapEx for the quarter is coming in at $13.2 billion, which is about $1 billion higher than street expectations. How much does that matter here? When investors have been focused on the halo effect of these mega cap tech names and the investments they're making and pushing out to the marketplace?
I think that's the biggest yellow flag in the print, in my opinion. The slope of the curve of capex, that's TBD in investors' book. Whether they exit 24 at $15 billion capex run rate, higher, lower, that's the biggest question mark, and that leads a bigger question that, okay, over what period? If you're spending about $55 billion run rate capex this year, then what does ROI look like, and over at what period? So that adds to fuel to that fire of that question, that capex, okay, you're spending right now, probably it's an aggressive move, but when do we get ROI? So in my opinion, leave aside YouTube, search strength, and all the other things, good things going on in Google. That's the biggest question to get answered to.